Hello, my name is Maria Bezubova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today is April 28 and this is a weekly markets update. Let's have a look at the news of week 17 and see what are the next trends. Main events in the urea market happened in the US last week. Urea price continued firming due to tight supply and high corn acreage. The highest level reached on Friday was a shocking $505 per short ton for April, the level last seen in November 2022. Supply window is quickly closing, so these increases are the last attempts to attract prompt volumes to the market. However, May barges were traded at much lower level, around $430 to $40. High values in the US supported prices in North Africa. Egyptian producers sold number of lots during the week, starting in low 380s FOB, followed by $395 sale for a 30,000 tons lot sold to the US market. With European demand coming to its end, US market gave some support for Egyptian producers, but only for late April, early May shipment. However, port congestions heard from several Egyptian ports might limit potential amount of exports. In the Black Sea, SOCAR closed its tender for 30,000 tons for May loading. The results will be known this week. Other than that, there was no sales activity there. Bids from Turkish buyers moved up a bit to the level of $400 to $410 CFR duty paid. However, there were no major deals done last week. Iranian producers should drop their price level to 330s FOB in order to meet the CFR level. We will see if it happens this week. Last week, producers were still asking $350 FOB, which didn't provoke much interest. In the Middle East, producers are more than comfortable for May, with shipments to India and Australia, as well as contract flows. The supply is extremely tight. Producers are indicating now price as high as $400 FOB. However, no deals were done last week. In Southeast Asia, Indonesian Pupuk closed a tender for 45,000 tons of granular urea at $402 FOB, which is a significant increase versus last business done. The producer is also in discussions before closing a long-term contract offtake tender this week for 700,000 tons to be supplied between May and October. Other regional suppliers are mostly committed for at least first half of May. In Latin America, the off-season demand is very thin. However, indications moved up last week after surge in US prices. CFR Brazil now is indicated around $390 to $95. CFR Mexico and Argentina increased to $410 plus. No new business was concluded last week, as per information from the market. In Ethiopia, EABC closed its urea tender for supply of 676,000 tons in 13 lots, 52,000 tons each. 7 suppliers submitted their offers. Some lots remained without offers. Now EABC will review all these offers, including cost of bagging, which comes on top of FOB price, as well as indicative CFR level. We will see how many tons they will confirm, because the latest similar tender in February was scrapped. Paper values corrected upwards. Egypt FOB future price May and June increased by $5. Arab Gulf FOB future price remained unchanged for May, but corrected upward by $8 for June. Brazil CFR significantly increased for May by $20 and June by $13. NOLA values skyrocketed by $40 for May and by $30 for June. Let's see how quickly it will drop though. In ammonium sulfate market, prices in China remained unchanged versus a week ago, hovering around $155 FOB for standard grade. Caprolactam production rates are expected to decrease by at least 20% in the coming months, which supports the Samsul price level. Compacted Samsul price was also unchanged at $165 FOB level. The demand in Southeast Asian markets is firming for small lots. In Brazil, demand also activated and prices moved higher to mid-high $180s CFR. Brazilian buyers stepped into the market in order to secure tons amid uncertainty with Chinese supply. Quite significant amount of business was concluded last week, as per market information. In the US, ammonium sulfate immediate demand was supported by a rally in urea price. Loaded barges were traded as high as $425 FOB per short ton. Previously purchased stocks are diminishing quickly with season ongoing, so distributors are trying to replenish, which is a difficult task. The nitrates market was mixed last week. There was lots of spot demand seen in the UK, where the nitrates application has actually begun after April 1st. On the other hand, in most of Europe, the season is almost over and activity had reduced. Brazilian buyer was looking into shipment of 15,000 tons of Russian AN for mid-May loading. But main purchasing season will start later in Brazil. In the UAN segment, Europe is mid-season. Prices are under pressure amid low demand and decreasing prices for other nitrogen fertilizers. At the same time, in the US, tight supply pushed prices higher last week. NOL FOB price surged by $10. Sales are very active across all locations due to strong demand from corn growers, and stocks are depleting quickly. Imports remain active. Argus estimated that April imports will double versus 5-year average. It is expected to remain very challenging for buyers due to supply tightness and demand peak. Ammonia market trend continues to be bearish. This week, May Tampa price will be agreed, so we will see clearer market direction, but there will definitely be significant downward correction. In the Middle East, spot prices dropped by $5 to the average of $270 FOB, and demand remains slow. Market analysts expect this level to be close to the floor, because several maintenance in Middle East in May and June should bring some relief to the building supply length. Also, certain demand uptick was registered from India, which will soon enter into the seasonal purchasing mode. At the same time, industrial demand in Asia continues to decline, weighing on market sentiment. The only confirmed spot deal west of Suez was for delivery of 20 to 25,000 tons to OCP at price $400 CFR, which marks $15 decrease from the last deal done. Other than that, there was a spot sales to Turkey, but price level is not available. 400 CFR dollars price level is considered by Turkish buyers to be high at the moment, as per discussions in the market. Phosphate prices remain high. However, crazy levels reported last week turned out to be non-existent. Indian Department of Fertilizers intervened and instructed importers not to purchase any DAP at price higher than $675 CFR. Thus, purchases concluded last week at the level of $700 were cancelled. At the moment, there is no clarity how the situation evolves, as international prices increase more, in fact. With all this uncertainty around DAP, Indian buyers started to shift their attention on NPS and NPK for purchases in July from China. However, this demand wave might cause export restrictions for NPS from China, similar to DAP. Deal between India and OCP still hasn't been finalized. Also, there is no news regarding Chinese exports resuming. There was a meeting of China Phosphate and Compound Fertilizers Industry Association last week. However, there were no announcements regarding exports done afterwards. OCP reported fresh DAP sales to Europe at price $745 to $50 CFR for May delivery, which is significantly higher versus last deals concluded. Also, the company sold DAP to Central and Eastern Europe, but at lower price of $695 to $730 CFR. MAP sales were concluded at the same price level. Ma'aden reported sales of 80,000 tons of MAP to Brazil under formula pricing and 44,000 tons to Bangladesh under government-to-government agreement. Egyptian NCIC closed its sales tender, and prices turned out to be much higher versus its latest March tender. DAP tons were awarded at $683 to $87 FOB, TSP at $535 to $40 FOB, which is about $35 higher than March prices. In Ethiopia, ABC closed its purchase tender for 420,000 tons of DAP. 7 suppliers submitted their offers. L1 was taken by Mid-Gulf for supply from Egypt at $696 FOB in second half June. Now ABC will review the offers. The final results will be known in about 2 weeks. Let's see if this tender will be finalized with actual nominations. In Brazil, prices remained unchanged, but in fact there was no liquidity. From the one hand, buyers wanted to secure tons before the season at least at current price level, which resulted in the round of purchases a week ago. But from the other hand, current high price level, which is the highest since September 2022, makes buyers reluctant to accept it. So let's see how the situation will evolve further in the season. In the US, prices increased both for DAP and MAP. DAP barge for May was traded at $650 per short ton FOB on Friday, and MAP even higher than that at $657 per short ton. Increasing DAP price and decreasing corn price resulted in the affordability ratio being worst since 2008. Unbelievable. Price hike is related to tariffs, of course, and generally tight global availability. There are no signs of relief anytime soon, unfortunately, and US demand is very healthy this year. Moving to the fundamentals. European natural gas prices fell to below 32 euros per megawatt hour, as low buying demand from major energy consumers in Asia magnified the impact of higher supply to key European transferring hubs. The arrival of liquefied natural gas into Dutch hubs was above seasonal averages, indicating ample supply from main producers to the continent and allowing EU countries to increase their restocking following the winter season. The improved LNG availability in Europe was in line with lower demand from Asia, with China's imports falling by more than 20% from the previous month, due to their macroeconomic headwinds with the trade war against the US. LNG intake was also lower from India, as thermal coal prices sank to 4-year low, driving power consumers to swing towards other feedstock sources. US natural gas futures fell to $3 per MMBTU, the lowest in 5 months, and tracking the decline gas prices in major hubs across Europe and Asia amid ample supply and uncertain demand due to macroeconomic volatility. Domestic gas production reached record high in April. That coincided with warmer than usual temperatures, reducing demand for heating. Warm weather is expected to continue until beginning May, so low price level will persist. Agricultural commodities future prices show different dynamics. Wheat futures dropped to price below $5.3 per bushel as improved weather in key growing regions pressured prices. Showers in the US plains are expected to ease stress on winter wheat crops. Meanwhile, warm and dry conditions in the Black Sea region had supported fieldwork, though upcoming rain could benefit soil moisture for winter wheat. These weather developments weighed on futures despite a rebound in the US dollar. Additionally, a stronger dollar made US wheat exports less competitive internationally, further pressuring prices. Corn futures slightly dropped from last week level, however, still remain relatively high, supported by surging export demand and tightening global supplies. April's WSD report saw old crop US corn exports boosted by 100 million bushels, already 30% ahead of last year, drawing down stocks. Meanwhile, Brazil's ethanol-driven boom has diverted roughly 15% of its corn crop to fuel, eroding its exportable surplus and forcing the US to fill the gap, even as Ukrainian farmers withhold grain and local processors pay premiums at ports. Even with USDA forecasts pointing to a 5.3% rise in US plantings, acreage gains alone cannot avert a near-term supply squeeze. Carryover stocks are projected to fall by almost 17% in 25-26, anchoring futures near multi-month highs. Soybean futures advanced to above $10.4 per bushel, supported by expectations of a de-escalation in the US-China trade conflict. Market sentiment improved after President Trump suggested lower tariffs on China, and Treasury Secretary also signaled optimism for easing trade tensions, though he cautioned that negotiations with Beijing would be challenging. The bullish sentiment in soybeans stemmed from easing tariff concerns, even though China had already completed its US soybean purchases. Soybean futures also received additional support from technical buying, helping to sustain their upward momentum. Moving to the shipping industry. Containerized freight index corrected slightly downwards last week. Rates of container shipments from China to the US dropped due to continuous uncertainty regarding reciprocal tariffs. Despite positive signals from Trump's administration, the unclarity regarding future trade flows will continue weighing on prices, as market analysts expect. The Baltic Dry Exchange Index continued its upward trend. The Capesize market showed a clear upward trajectory supported by strong activity in both basins. In Panamax segment, the Atlantic market was once again the center of attention, possibly influenced by the easing of US tariffs before Easter. Strong demand across the basin significantly impacted rates, which surged forward with reports of various front-haul fixtures from North Coast South America. In Ultra Supermax segment, the sentiment was mixed. Whilst the Atlantic was a rather muted affair, the Asian arena saw renewed interest. The Atlantic was very slow, and continent Mediterranean also lacked fresh impetus. Similarly, the US Gulf remained rather dull. However, in Asia, the situation was more positive. Handysize markets saw minimal activity last week across both basins, with the overall sentiment remaining flat. To sum up, urea price found support in the US, where price hit level unseen from September 2022. Healthy demand for May beginning June arrival and limited supply that is available for this arrival window will keep prices high. If India enters the market with another tender somewhere around mid-May, we might see June level not dropping as significantly as it usually happens during this off-season time. Phosphates prices continued increasing. However, Indian government cancelled purchases at crazy levels reported a week ago. But steady demand, limited supply with Chinese tons being absent from the market, and still extremely high sulfur price will support elevated phosphates price level. Ammonia price was further under pressure last week amid slow demand. Nitrates prices continued easing because of season end. Only UAN price in the US increased due to very tight supply and surge in urea price. Gas price in Europe decreased amid warm weather and steady LNG supplies. Same trend was registered in the US. Wheat and corn future prices corrected downwards, while soybean price increased amid expectation of trade war ease between US and China. Container shipping price decreased further, while bulk shipping activity was strong across segments and geographies. So let's see what is next around the corner, but it will be already next week. Thank you for watching. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon.